investors and traders. How are you? It's been a while since we had a video where we just spoke about the market. But this week, it's the week of the 17th of November. So I just want to talk about the market a bit, what is happening in the GSE, and maybe what is happening outside the GSE as well. So first of all, the GSE Top 40 or All Share Index both have reached an all-time high, which is good. That means that the market is rising. So just in case you haven't been following the market, but the market has been rising. So the All Share Index is just the list of all the listed shares in the GSE, and they take each and every price, they calculate the index using the prices of all the shares that are listed in the GSE. Then they get an index figure. So the figure, it's around, at this moment, it's around 70,000 points. So they calculate that it is presented as points. So the all share index has just crossed beyond 70,000. So that means that the market is rising. It's possible that the GSE is in a bull run. So what do you do as an investor in the bull run? You want to be invested in the market so that you can take advantage of that bull run. And then also the GSE Top 40. So that's an index that tracks the top 40 companies by market capitalization in the GSE. So in this case, we have, of those top 40 companies, we have the typical big conglomerate like Anglo-American, Naspers and Prosus, which, well, you can say it's the same company, but Naspers and Prosus they used to have about 18% of the entire top 40 index. Also the all share index, because it's still the same companies, except that now it's all the companies. Naspers and Prosus are still the biggest companies in there, right? So the top 40 is also reached an all-time high. I just want to look at the chart here. I will just be going between the video and the chart. I'll be overlaying the charts on the video, just to make sure that you can see what I'm talking about. But on TradingView, we don't have a chart of the all share index. I will only overlay a chart of the GSE Top 40. So now I'm looking at the chart. Yesterday it closed at about 64,337 point. So now it's not easy. Not everyone can trade an index. If you have an account, a trading account with IG South Africa, for example, you can trade the GSE Top 40 or any other brokers that allow people to trade indices and CFDs. But for the ordinary investor, retail investor, one of the easiest ways to take advantage of this rising market is through ETFs. So now we have two ETFs that I'll be talking about. We're going to start by talking about the GSE Top 40, the one that broke above a resistance level recently. So now it's trading just above 64,000 points. So the ETF that you can use to track the GSE Top 40, I'm just gonna call one by name, but any other top 40 tracking ETF will do. But in this case, I will speak about the Satrix Top 40. The reason why I'm talking about the Satrix Top 40 is because that's the cheapest ETF in terms of total expense ratio. The price of the ETF is determined by the net asset value of that particular ETF. So in this case, we are tracking the top 40. The top 40 is at 64,000 points. So now if you look at Satrix 40, it's probably trading around 64 rand, which reflects that 64,000 point that the top 40 is trading about. So when I say the Satrix Top 40 is cheap, I'm not saying that it's cheap in terms of the rand amount that you can pay for Satrix Top 40. I mean that it's cheap based on the total expense ratio, because when you invest in such assets that are managed by some fund managers, there are fees that you're going to pay. So that total expense ratio is part of the fees or the amount that you're going to be paying to Satrix. You're paying Satrix that they are providing you with this security, the Satrix Top 40 ETF. So yeah, if you want to take advantage of this bull run, that is where you would want to look at, especially for beginner investors, those who don't really know how to evaluate companies that they want to invest in, just those who don't know how to go about assessing whether a stock, you want to buy the stock or you don't want to buy that stock. There are so many ways to do it. The most common way is to do um, fundamental analysis. You use the company financials, you look at the business, the management of the business, the product, then you come to a conclusion whether the price that you're going to be paying for that particular security is closer to the value of that business. And then depending on whether the price and the value are aligned, then you can make a decision that you will be buying that security. But in this case, with the ETF, it's no brainer. It doesn't need you to do a whole lot of research, as long as you know that the Satrix Top 40 has a total expense ratio of 0.1 and that it distributes every quarter. So March, June, September, and December, you would expect that Satrix will give you some feedback on how they performed and then decide if they want to distribute some of the money that they've made from the companies that they hold. So that's one way to take advantage of the JSE Top 40. Then now the all share index, there's a new ETF on the block. We spoke about that ETF. That information is there on our YouTube channel. If you click on that pop up, it will take you to that ETF. So the ETF that now I'm talking about, it's a JSE. It has a full name. It's just a long name, but it's JSE all capped all share ETF, or a mixed masala of those words. But what is important is that this is an all share index tracking ETF. And then instead of having one company like we see on the JSE Top 40 where it's not kept, if Naspers has 18%, then they will invest 18% of the fund's money to Naspers. In this case, each and every company is kept to 10%. So it doesn't matter whether it's greater than 10% in the index. Well, there are some other companies that has lower shares, because it's not like they want to put 10% to each company. No, the maximum that they can put to each company is 10%. If the company's contribution to the all share index it's 1%, it's more likely that it will only have that 1% in that ETF. So I looked at the chart of that Satrix all capped. Let me look at it again so that I can overlay it. Don't worry, I will edit this video just to make sure that all of this it shows there in this video. So yeah, this is, well, it's not a chart, it's not something big, but the ETF is called Satrix Capped All Share with the share code. This is a trading view share code. It may not be the correct share code, but it's STX. Then there is a CAP for capped. So we know that this ETF listed on the 10th of November. Before that, they were selling an IPO. Most of subscribers to this channel are Easy Equities users. So I will speak from the perspective of Easy Equities investors. Easy Equities sent a communication with Satrix talking about this ETF and the IPO, what the investors can expect and how people can invest in this ETF before the listing. And then there was a subscription date. I think that was the 29th of October. Then you will just say that you want to participate in the IPO. There were letters of allocation. Then those letters of allocation were converted to the ETFs on the 10th of November. So this chart shows that the lowest, not necessarily the trading price of the ETF, but the lowest it has traded since listing was around 35 rand 10 cent. It's currently trading at 35 rand 85 cent. So it's still within that 1 rand range of that IPO. Based on the net asset value, I don't know how they calculate it, but since it's kept, I don't expect it to fully mirror the all share index. Like I said, the all share index is now greater than 70,000 points, but this ETF, it's around 35 rand, which is like half of that net asset value. But remember, this one is kept. So my personal view is that 35 rand seems to be reasonable. In this case, I'm not talking about whether 35 rand is the right price for buying this Satrix capped all share index ETF. I'm just saying 35 rand in terms of rand value is not that much. It's amount that I would be happy to pay for this ETF, this particular ETF. And then now just comparing these two ETFs, okay, the Satrix capped ETF is going to be making distributions every 2 months, meaning that you'll be paid twice per year. I don't remember the exact months. On that video, we spoke about those months because we were looking at that data sheet where they were talking about that IPO. But I know that they will just skip 1 month, then the following month they will make a distribution. How much that distribution is going to be, I don't know. I will wait and see until they make that first distribution, or until they update the MDD. Well, I don't remember the full name of MDD. MDD is the abbreviation, but basically the MDD, it tells you everything that you need to know about that ETF. There's the name of the ETF, the value or the net asset value, the number of investors, total expense ratio, performance. They also describe what that ETF does. Usually, most ETF providers will tell you the top 10 holdings of that ETFs and also share the sector allocations of that ETFs. So yeah, that's what I wanted to talk about today. That the JSE All Share Index and the JSE Top 40 both have reached an all-time high. So it seems like we are in the bull market. I don't want to explicitly say we are in the bull market. I mean, there are some stocks that keep on growing, which is good. That's more money going to the investor's pocket. But just in case you missed that out, you're not aware that the top 40 and the all share index have reached an all-time high. And even if you are aware and you are thinking, how can you participate in this? The Satrix ETFs are going to help you. You can buy the ETFs. And like we said in that video where we said, how can you invest a limited amount of money? We still say that if you are just starting as an investor, yes, it's exciting to want to invest in everything, buy this, buy that. When you are in a social media group where people talk about different kinds of shares, today we are talking about Brico, the following day we are talking about Tungela, and you want to participate in all those things. There's nothing that can stop you from doing that. It's your money at the end of the day. But if you really want to grow your money, well, we're not going to talk about volatility because volatility is always going to be there, whether you like it or not. But I just want to talk about if you invest in an ETF as a beginner investor with a limited amount of capital, you just keep on adding those contributions. It doesn't matter how much you can contribute per month. You know that you are buying one thing. Let's say, for example, you contribute 500 rand per month. Well, I'm saying 500. When I started with 250 rand per month, but now we have to per month. Now we have to take inflation into account. Let's say you can afford to invest 500 rand per month. Then you can either buy the Satrix Top 40, which is the cheapest. It tracks the general market. Well, there are some stocks that are outside the top 40 that are performing better than the stocks that are inside the JSA Top 40. And also, yeah, There are some stocks that are performing better, but you're going to miss that performance because those companies are not in the JSE Top 40. Or now, as far as I know, the all capped ETF, it's the first of its kind. So we never had it before. We always relied on the Satrix Top 40. Now there's an all share index. You can buy that one. Now you're getting exposure to all the companies. So you don't have to worry about when you have 500 to invest per month. You want to spend 50 rands there, you want to spend 50 rands there, and then that stock doubles up, but you only invested 50 rand. Yes, I understand your 50 rand is going to grow to 100 rand, but there isn't much that you can do with that 50 rand profit compared to if you took that 500, you invested it in one company, and then that one company doubled in share price, then you would have made 500 profit. But obviously, putting all your money in one share, not ETF, in one share, it's not a wise thing to do because you can't really predict how that share price is going to perform. But now, based on my experience, I've been trading the market for a long time. It's better to have a reasonable large amount per share. If you want to buy telecom, have a reasonable amount of telecom so that when the share price grow by a reasonable amount, then also your capital grows by a reasonable amount. There's nothing as painful as putting 10 rand in a name, not that you lack conviction in that name. You put 10 rand because you have 10 rand. Then that thing, it grows 200, 300%. Your 10 rand just became 30 rand. There isn't much that you can do with a 20 rand profit. So that is why my suggestion is that if you are beginning investor that does not know how to pick stocks, just stick to the ETF while you are learning how to do stock analysis, all those kinds of things. And also because you are just starting with limited capital, unless you have a lump sum that you can just throw in 10, 20, 50, 100k into your account. But if you're just beginning from zero and you can afford to put around 500 or less than 1000 per month, just go to the ETF. The ETF is going to solve most of your problems. So that's it. Keep those two ETFs in mind: Satrix Top 40 and Satrix Capped All Share ETFs. I don't remember the total expense ratio for the Satrix Capped All Share, but it's still low. It's probably 0.29%. Well, it's expensive compared to the Satrix Top 40, but it's less than some other ETFs, the ETFs that are charging 0.5% or more. So yeah, you just have to decide for yourself which one you want. Do you want the Satrix Top 40, which has always been there forever, or the Satrix Capped All Share ETF, which has just been recently launched? My preference is the Satrix Capped All Share, but I mean, I've been a holder of Satrix Top 40 for a long time. But since now we have this kept all share, I would then consider shifting my capital to that one. Plus, I would like to have those distributions coming every 2 months, just because those distributions will come every 2 months compared to the every 3 months that we see from the Satrix Top 40 doesn't mean that at the end of the day you're going to get more money from the all share. No, it's still the similar companies. There are companies outside the JSE Top 40 that are also not performing great. There are penny stocks that are just struggling big time. They can't afford to pay dividends. You look at their trading statements. If you read the stock exchange news services, either is the trading statement or the financial result, they're just performing poorly. So sometimes it's really not worth it to go and hunt in the bin. But that's a story of another day. So for today, I just wanted to talk about the JSE Top 40 All Share Index and these two ETFs that you can use to take advantage of the bull market that we are in. So if you enjoyed this video, I would like to ask you that you consider subscribing to the channel and also give this video a thumbs up. If you have any questions, comments, suggestions, just leave them there in the comment section. I try by all means to respond to each and every comment that is left in this YouTube channel. So thank you very much. Please consider subscribing to this channel. I will see you on the next video.